We are waiting for a breakout. That's the topic for today's Backstage Pass. Well, stocks are up so far this morning. Mortgage bonds are about flat. Mortgage rates are going to open about where they closed off yesterday. We'll talk about more in just a moment. We'll talk more about that in just a moment. But first, let's do a quick recap and look back at the last 2 weeks at all the things that have been affecting the markets. Had a busy past couple of weeks. We're going to go back to last week first. We had ISM manufacturing data that came out, and the manufacturing data came out, and it was hotter than expected. And then later in the week, we had the BLS Jobs report that came in twice what was expected. The number of job creations was double the expectations. And so, the inflation data that had been coming out previous to that, it's shown that, inflation was kind of trending lower. Those two reports last week really kind of shifted the other way or showed the opposite. And so we had quite a volatile week last week when it comes to the mortgage bond market and mortgage rates. Let's fast forward to this week and look at what came out this week. We had CPI that came in better or lower than expected. And then we had the PPI that came in lower than expected as well. So both of these inflation data points came in lower than expected. And so the natural thought is that the bond market would have liked that and really rallied around that. But that rally hasn't quite happened yet, and here's why. Since the middle of June, since the CPI data came out in the middle of June, and we had a big sell-off after that CPI data came out in June, since then we've been on an upward trend for the price of the mortgage bond. Mortgage bond has been trending up since then. But there's a technical level that we've hit. It's the 100-day moving average. And the mortgage bond has had trouble, the price of the bond has had trouble getting over that 100-day moving average. Last week we kind of creeped over that, and then we came back down underneath that, partly because of the data that came out last week, partly because it's a technical level that is a ceiling, a technical ceiling we've had trouble going over. And we've really been touching that ceiling since the Fed raised the Fed fund rates by 75 basis points at the end of July. So that 100-day moving average has been the technical ceiling for mortgage bonds since that time. Now, like we discussed yesterday, we're in a pennant formation, and so we've got this 100-day moving average that's coming down, and that's been the technical ceiling. We've got a trend line that's trending up along with other technicals that are trending up, and mortgage bonds are getting squeezed into this area, right? And then in this area, that's the sideways trading that they have. And whenever you see a pennant formation like that, typically whenever there's a breakout, again, typically, not always, but when there's a breakout from either the ceiling or the floor, it's typically in the direction of the trend line. So since the middle of June, we've been trending up. All right, we're in a pennant formation right now on the mortgage bond, and we are hoping and looking for a breakout, and the breakout in the upward direction. Now, today, mortgage bonds are up about 2 basis points. They're down off of their morning session highs, which was about 20 basis points up. The 10-year yield is down about 2 basis points. We're dealing with some illiquidity in the market, and what that means is that the people who are bidding to buy mortgage bonds are at one price. The people who are asking to sell mortgage bonds are at a different price, and that price differential, it's known as illiquidity, and so we're seeing a little bit of volatility this morning. It means mortgage rates are going to open up about where they closed yesterday after some volatility yesterday and some repricing for the worse. We're in about that, national average is about that 5.34 range for a 30-year fixed conventional loan. That's about the average right now for today. If mortgage bonds can get back into that positive territory and move back up to those session highs where they were 20 basis points higher or more, we could see mortgage rates improve today throughout the day. We'll just have to take a look and see. Again, we're looking and hoping for that breakout out of this pennant formation to the upside. If that does happen, it's going to be very, very positive for mortgage rates. So that's what we're looking for in the next week or two. But until then, remember to stay positive. That's all the news that we have for today. I hope you have a wonderful day, a wonderful weekend, and we'll see you next week.